My name is Deepak Chandnani. I'm the CEO for Worldline for South Asia and Middle East. Worldline is an e-payments company, one of the largest in the world, headquartered in Paris. We're a Europe-based multinational, 17 countries around the world and growing. So the largest trend is fraud and risk. And you've seen that in the press. Target, a whole bunch of other large retailers in the US. Not only in the US, but around the world. So fraud today accounts for $15 billion of loss. And addressing fraud is a major trend for the whole industry. It's becoming even more important because everything is going digital, and the digital world is a lot more open than the old world. So that's one major trend in the market. The second is mobile payments. So AirPay by Apple is the big deal. And with Apple entering, I think it's revived mobile payments in a big way. Google had it some years ago. A few others tried to get it going. We know that M-Pesa had it many years ago. But we're seeing a big revival thanks to Apple, and I think that'll be a trend going forward. The third trend would be more to do with omnichannel. So now retailers are trying to marry mobile payments with tablets, the regular point of sale, with internet payments. So they're trying to get a single sort of customer experience, irrespective of what channel the customer uses. So I see that as a major trend going forward in terms of how payments actually happen and are accepted in the market. Proximity payments has actually become a buzzword today. So you go to any market, and if you don't have proximity payments, you get turned away. So far, acceptance is not very high, but both Visa and Master have good solutions. So I expect that we will see a lot of deployments of things like terminals, NFC cards, but it'll take some time before these proximity payments actually become a substantial part of overall payments. Today, chip and PIN is becoming more popular. Previously, it used to be just the magstripe card. And I think proximity will come, but it'll take some more time. But certainly is a trend that is going to happen. There's no two ways about that. Today, we find that in emerging markets, cash is convenient. Cash has been around for a long time. But as we go forward, most governments are trying to mandate electronic payments because they don't want to print money, and it saves them a lot if they don't have to print money. Retailers are finding it useful because they don't have to then store the money, they don't have to do insurance and so on and so forth. Consumers still, a lot of them still use cash. So there's got to be a set of incentives that come into play. We know that in markets like Korea, there was an incentive introduced for retailers to accept electronic payments instead of cash. They got breaks on taxation, and that drove terminalization and electronic payments rapidly in, for example, Korea. And we've seen that in some other countries as well. So I think all the stakeholders have to bring some incentive to play for consumers, for retailers, to make electronic payments a lot more popular than they are today.